Welcome to Checks and Balances. I'm Michael Vincent. This is James Blair. And this week, Amanda Quill, manager of the accounting team at Lighthouse, is going to tell us how to get organized for your first year of rental returns.
Alrighty, so you bought your first investment property. You are ready to take control of your financial future. But then old Uncle Chippy comes along and go, it's time to pay the tax man. So we've got Amanda because Mike and I don't know anything about tax.
I don't even pay it.
he goes plus just. He doesn't pay just.
Hey, let's not throw the fraud around.
So Amanda, welcome back. Let's talk about the boring part about having an investment. No offense, but it's boring.
It is.
But you have to do it right, or there's huge implications, right?
Yeah, right. So you do want to do your first return and any of your returns correctly. So in getting prepared, you would have hoped that when you first bought it, you'd been in touch with an accountant. Presuming that you should have set up a separate bank account for it. You know, everything goes in nice and neat. You have your rent coming in, your rates, your insurance, your mortgage payments, and then all your little repairs and stuff going out of that one account.
Yeah. So you've gone, that makes sense.
Yeah.
So just as let's not skip over that point. So, but you've come and done your first year of, you've done your first return. When you do all the work up front, you should be having a conversation around who owns the property.
Yeah.
Cool.
Absolutely.
What percentage of, and between the two of you, what percentage are having that conversation?
Okay, this is going to be a different answer for Amanda and I. What percentage of my customers or Lighthouse mortgage customers are having that conversation? Probably 98%.
Okay.
What percentage in the market? I don't know if it'll be that high. Again, it just because we offer a full service, every customer who buys an investment property pretty much has the chat.
One-stop shop, baby.
Yeah, I mean, we do get clients getting in touch being like, hey, I've had a rental property for 5 years and I haven't filed a tax return. But that amount of work for us is like maybe 1%. You know, a majority of people are like, oh my gosh, I'm buying an investment property.
Yeah.
What do I do? Help me. And so that is the time to get the help, right? You can't fix it after the fact.
And I swear, I'm 99% sure we've done an episode on look-through companies versus trusts in the past. Ravi, if that is correct, can you just pop like a link or a video or something up? And also in Spotify. So you got to have a conversation around the structure. You've also got to make sure you have a separate bank account. So
yeah, it just keeps it easy.
So
simple.
My first rental property, which was my first home, and then I moved, I had the whole messy structure. Yeah. I had rent coming into
all
my
your accounts.
let's not get all my dirty laundry out. We want this to be short and snappy. I had all of my rent coming in. It screwed up all of my cash flow because money was just coming in and going out. You need to set up a separate bank account. You need to work out how much you need to top it up by, automate it.
Yeah.
Make life nice and simple.
Yeah.
So once we've got that out of the way.
Yeah, so presuming you have that, if you're at the end of, so we've passed 31 March, basically the first year of return, you want to get in touch with your accountant, send them through like the settlement statement for the purchase. So that shows the purchase price, the date it went through, the lending that you received, because with the interest deductibility rules, there's important things around tracing the loans back to the property. If it was like yours, a property that you lived in and then it's become a rental, just dropping that as a note to an accountant is such a help, because otherwise we sit there being like, where did this come from?
Yeah.
They started renting it in August. It looks like it's been owned since 2015. What were they doing before? You know? And so just telling us is really helpful. Interest deductibility adds a whole level of complexity. So if you've got a new build, we need the code of compliance certificate. If you're renting it to social housing, we want the contract with social housing. If you're using it to if you're doing a build to rent kind of situation, or you're developing on the back of it to put new builds on, any of those kind of exemptions, we want the proof, because the thing is we randomly get asked by Inland Revenue to prove that. There's little boxes that we tick in things and we have to provide that information. So giving it to us means that we can pass it on.
Out of interest, how often do you get hit up by IRD?
I would say for every 100 returns, maybe twice. Yeah. So like 2%.
Yeah, I mean that's a high number than I thought.
Yeah, and it's completely random, right? There's times where they've asked me for stuff, and I'm like, but it's all in government systems. Like, surely you guys have the data on this, but I think it's them just checking those as well. And then so if you've been purchasing things for your investment property, you want to give the invoices or like some background along with the invoice, because you can go and buy something and be like, it's for the rental, and we're like, but what is it? It just has some numbers. because every vendor and stuff has different levels of detail they put into an invoice. If you have a property that you've just purchased, you want to get in contact with Valuate. They do Chattel's valuation reports. You get to claim depreciation, non-cash expense. Amazing.
Can we drill into that just a little bit for people who don't know what chattels are or depreciation on them and what are you claiming? Can you just start at the top? Tell us what a chattel is and tell us why it's important.
Yeah, cool. So basically when it comes to chattels, they are parts of the property that are separate to the actual building. So something you could remove and not change the actual house.
The structure.
So, So your carpet, your air conditioners, the oven.
Curtains,
the driveway.
What? The driveway?
The driveway.
All right, there you go.
You can remove the driveway.
You can remove the driveway. And you can depreciate the driveway. Okay. Not very high rate, obviously, because the idea being...
Obviously, James.
Yeah, sorry.
the idea...
Can I depreciate my driveway? My driveway is like cracking.
Your driveway is...
Yeah.
No,
I'm not talking about that driveway.
No, I know you're talking about the
your
other
personal
driveway.
or the rental. No,
yeah.
But so that's also the problem, right? If you've had the rental property for you've had it like 6 years or something now, it's... As far as I understand, they won't do the report anymore. If you put a new driveway in, we'd get invoices from you, would depreciate it. So the Chattel's valuation basically takes every little asset within the property, assigns a value to it based on what the valuer thinks it's worth, and then you get to depreciate that in accordance with IRD rates.
Cool. And why is that important? Why is depreciating something important?
Non-cash expense. So you pay, I think it's about $550 for the report.
Yeah.
We probably see that people in their first year would get to claim somewhere between like $5,000 and $10,000 worth of depreciation expense. So
Riley's face just went.
But again, tell me, why is that important?
So
what
that's going to reduce.
It's money, Mike.
Yeah,
It's money.
So that's going to reduce your profit. So that increases your expenses that you get to claim.
Yep.
Decreases your profit.
So then decreases your
tax to pay.
Thank you.
Why didn't I do that? Oh,
we can slap a new driveway and rims. Don't worry about it.
Do you know how expensive driveways are?
Yes.
Oh.
Cool. Okay, so that's why you should get a Valuate report. Look at the chattels. Speak to an accountant about depreciating that. Amanda, what's next?
So then things like really simple things. If you are going to the house to do inspection, so if you don't have a property manager who's doing that stuff for you, you're going to the property for inspections, you're going to go do some repairs. You want to keep a track of how many times you're going there. If that is twice a month and it's 12 kilometers from your house, you get to claim for that. And that is determined each year by IRD. There's a set rate. And so again, another expense, reduce profit, reduce tax. And then...
Can I just jump in quickly?
Yeah.
Don't be silly and do your own property management stuff. You're just asking for trouble.
Yeah, and I mean, that's the thing. Getting a property manager does take away a level of admin that we know everyone hates admin, right?
I do not like admin.
So they sort out your rental payments. They sort out the repairs that need to be done. They get everyone organized. You're pretty hands-off in your investment property, and that's kind of the dream with it, right? It's meant to be a passive investment that you don't have to care too much about.
Well, it's costing me $2,000 a year. Just do it.
If you're collecting $40,000 in rent, and then, so you can't claim, if you're doing the repairs on the property yourself, you can't claim your time for that. The idea being that the profit you get is your remuneration for that time. But you can claim things for, so your phone, you can you can claim 50% of your phone. You can claim a home office, you can claim the travel as long as it's legit. And that's where accountants come in to check that is all above board.
Cool.
Easy as that. Anything to add before we wrap this up?
No, I think that's all. Get in touch.
Okay, and then make sure that just send it all through. Just one last question.
Oh, yeah.
Just sometimes people just send you 1,000 attachments and you go, oh, this is...
Yeah, being organized also helps. Yeah. Sometimes we do get 500 attachments to an email and you're like, I don't care that you went for coffee on the weekend.
Yeah. I really should have got a Chattel's report.
Regrets.
Yeah. All right, we're going to wrap this up. Please subscribe. Please review. We'll catch you next time.
Cheers.